Welcome to Weekly Market Research from Fullerton Markets. Let's dive into the latest market trends and insights. Dow Jones. Wall Street faces a pivotal week that could define its path into 2026, with big tech earnings, a key Fed meeting, and a Trump-Xi summit all on deck. The Dow topped 47,000 and the S&P 500 hit 6,800, capping a strong October despite economic uncertainty. Investors expect a Fed rate cut next week, but Chair Jerome Powell's remarks may drive sentiment amid limited data. Markets are also eyeing the Trump-Xi meeting for signs of easing trade tensions. Strong tech results and dovish signals could push the S&P 500 towards 7,000, while any disappointment risks short-term volatility. U30 USD on H4 chart, the 47,000 level, which marked an all-time high in early October, had served as resistance before finally breaking out. However, with less than 2 trading months left in 2025, another major rally among Dow Jones stocks seems unlikely. Gold prices pared earlier losses on Friday after softer-than-expected U.S. inflation data reinforced expectations of a Federal Reserve rate cut this week, though the metal remained on track for its first weekly decline in 10 weeks. Gold slipped 0.55% to $4,111 per ounce, down more than 3% for the week after hitting a record high of $4,180 on Monday. Analysts said the pullback reflected profit-taking and waning safe haven demand amid signs of easing U.S.-China tensions. The Labor Department reported that annual inflation rose 3% in September, slightly below forecasts, fueling bets on back-to-back rate cuts in coming months. Lower rates tend to support non-yielding assets like gold. However, traders warned that a drop below $4,000 could trigger a deeper correction toward $3,950. XAU-USD on H1 chart. It's the first week after 9 consecutive weeks of gold's bullish run, just as historical patterns. Typically, after such an uptrend, gold experiences around a 33% correction, which could occur toward year-end as the metal forms lower lows each week. USD JPY. Japan's new Prime Minister Sanai Takaichi announced plans to accelerate the nation's defense spending target to 2% of GDP within this fiscal year, 2 years ahead of schedule, signaling a more assertive stance on national security amid rising regional tensions. In her first major policy address, Takaichi emphasized that the move is part of a broader proactive fiscal strategy aimed at revitalizing Japan's economy, while ensuring the country is better prepared to defend its interests in an increasingly uncertain geopolitical environment. USD JPY on H12 chart. Despite Japan's leadership change, the yen remains at its weakest level of the year, similar to early February, when it hovered around 153 ZAUD against the US dollar. If the pair break out, there's a chance it could reach 160,000 ZAUD again by year-end. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.